Hello and welcome back to GoldStockTrades.com. Today we have with us Ken Cunningham, CEO of Miranda Gold. Miranda can be traded as MAD on the venture, and it also can be traded as MRDDF on the OTC. Thanks, Ken, for being here with us today.
Oh, Jeff, thanks for having me on board, and I wanted to say a thanks to your subscribers as well as other interested parties that are able to catch this interview.
Ken, I wanted for you to comment. We've seen over the past few years the exploration budgets of the majors have been increasing, yet the amount of discoveries that have been made have actually been decreasing. I was wondering if you could comment on this situation, and if you could tell us how Miranda fits into that picture.
Yeah, that's a great question, and you're absolutely right. With record profits coming off of the major companies' production, especially in gold, you have seen worldwide exploration budgets absolutely soar. The availability of talented, experienced geologists is all but dried up. It's quite amazing. I see job offers on a daily basis, people looking for good geologists, and they just aren't out there. And at the same time, with the so many junior companies springing up, they have literally stolen some of the top talent away from the majors, and that certainly could be said about Miranda as well. As you know, we had Joe Hebert as the chief generative geologist for Placer Dome before he joined Miranda. So, not only is it the properties, the majors are cranking out profits that are records, but and spending money like you mentioned that are records, but they're also depleting their reserves, and that's where the juniors really fit in, especially juniors like Miranda. We are a part of the pipeline for discovery, and when you've got a junior that is really not interested in being a producer, such as Miranda, but interested in the discovery process, we're a perfect fit both for partnerships and alliances with the majors. And of course, the majors are always looking at our projects, and sometimes they come in as our partners. And obviously, one of the strategies for an end game with a company like Miranda would be to make a discovery and have a major come in and pay a premium to take that discovery and the company into their fold. And that's one of the ways the majors replenish their reserves. If you look at where most of the major companies spend their drill dollars, they spend them right around, it's called brownfields exploration. It's within miles or within the proximity of their existing mines, and that gets back to the old saying, the best place to find gold is where you've already found gold. So the majors spend lots of money trying to expand their current mining operations, and they look to the junior companies like Miranda to do what we would call the greenfields type of exploration, and that's the new exploration that would actually find new deposits outside of the existing mines.
Ken, one of the big news items is the Barrick multi-million-ounce Red Hill Gold Rush discovery. We hear that Barrick is spending over $64 million to grow this resource. How do you see the Cortez Trend in Nevada? Do you see that it may be a better place to be than in some of the foreign locales that some of the majors are dealing with the rise of resource nationalism and geopolitical crises like we're seeing in Mali right now?
Oh, there's no doubt about that, and I've got to hand a lot of credit to Barrick. I think Barrick saw this writing on the wall, and they saw it, sometime between the last, at least 5-10 years ago, and Barrick was born in Nevada. but they came in. After the fact. I mean, there was a point during my career where Nevada mining was dominated by Newmont, and Barrick picked up a property. The infant Barrick startup company picked up a property in the Carlin Trend, and they grew that into the largest mining company in the world. And off the top of my head, I'm trying to think when they acquired Placer Dome. I guess that was probably in 2004 or 2005. I think they made a decision at that point in time to focus on Nevada. I think they realized that the gold trends in Nevada, the Carlin Trend, the Eureka Battle Mountain Trend, the Cortez portion of the Eureka Battle Mountain were areas that were going to yield favorable results in the future, and they've been spot on. They're now talking about a super pit up in the Getchell area that would encompass their underground mine at Getchell as well as their open pit at Twin Creeks, and turn that into this mega pit. And of course, they've had outrageous success in the Cortez Trend. There's little doubt in my mind that they paid over $1 billion for Placer Dome to acquire that land position, especially the Cortez position, and then they spent another $1 billion to buy RTZ or Kennecott out of their partnership because originally the Cortez holdings were a 60-40 partnership between Placer Dome and Kennecott. So, Barrick is now spending in this one project that you mentioned, this Red Hill Gold Rush project, $64 million in 2012. That's larger than their worldwide exploration budget was, back in the times when gold was, under $300. So it's amazing the way things are evolving. You had asked me to talk a little bit about the history of the Cortez Trend. The actual original Cortez deposit was found by Dome Petroleum, which became Placer Dome, back in the 60s, and that was one of the earliest Carlin-type deposits that was mined in Nevada. And then we waited all the way from the mid-60s until the late 1980s or 1991 for the discovery of the Pipeline deposit. And so then the Pipeline deposit was discovered under the gravels of the basin up in the Cortez area, the Crescent Valley area, and that has resulted in a 20 million ounce discovery that was Placer Dome's cash cow and is now in its waning years of production for Barrick. And so then what happens is that Placer Dome was just started to get drill holes into a discovery, and then they were taken over, and Barrick finished drilling it out, and that discovery became Cortez Hills, and that discovery was made in 2003, and that's sitting right now at 13 million ounces and growing, and is already in production, so fast-tracked into production. And between 2003 and today, another new discovery, the Red Hill Gold Rush. So, between the original discovery of the Cortez Pit and Pipeline, there was a 20-plus year gap, and then a 10-plus year gap, and now these new discoveries are happening within 5 and 6 years. And I personally feel, and I think we've provided you with an illustration that perhaps you'll be able to show your viewers and subscribers. These deposits in the Cortez Trend, they occur along a mega shear zone or a mega structure that's deep seated. And what happens when you shift along a structure like this and you get lateral motion going in two different directions to create a fault zone like this, you end up with an in echelon type of tear in the subsurface, and that those tears they create the really the conduit or the openings that these gold-bearing fluids use to migrate up to the surface, and then they hit these carbonate or limestone rocks that we call the lower plate rocks, and because they're limestone, they're very reactive to acidic hot solutions, which are the gold-bearing solutions, and so those limestones start dissolving, and they create lots of open space, and that open space provides more fluid flow, and you end up with these world-class deposits, and they are, the recent numbers, which I know you've seen from Barrick, just in the last 6 months, they've doubled the size of Gold Rush from 3.5 million to 7 million ounces. I can tell you that not only are they spending $64 million drilling that area, but they have 14 rigs out there today as we speak. And the industry expects that at the end of this year, that'll be something in the 15 to 20 million ounce range. So incredible deposits.
So Ken, Miranda's drill hole BRH-13, this may be the most significant intercept outside of Barrick's holdings in the Cortez Trend.
As far as we know, that is no exaggeration. We keep track of who's working in the area. Miranda's been excited about this area since I joined the company, and since Joe came on board in 2004. We feel that this is a significant land position. Joe talks about predictive geology, and that predictive geology, gets back to these in echelon tears and the distribution of these deposits to the southeast. And if you look at these deposits as they continue to be discovered, we've now got 3 of them starting up to the north with a pipeline, and then coming down through Cortez and Cortez Hills, and now the new discovery. We think there's potentially one in the basin between Miranda's property and Barrick's holdings. However, that basin is very deep. It's got as much as 10,000 feet of gravel in it. And then we have Red Hill. And what do we know about Red Hill? We know that it's absolutely along this in echelon trend. And we know that we've got a drill hole there, this BRH-13 that you referred to, that has 45 feet of almost a quarter ounce of gold in it. And it's not just the thickness, and it's not just the grade. They're both significant. But when we looked at the cuttings from that drilling, and when we did the trace element geochemistry and assays on it, we found all of the things that we're looking for in a Carlin-type deposit. We found that it was a gold-only system. That means gold, not any silver associated with it. That's very diagnostic. We found that some oddball minerals like thallium were very elevated in the trace element geochemistry. We looked at the lower plate carbonate rocks, and we found that they had been exposed to acidic solutions that were causing dissolution of the calcium carbonate. And we found that we also saw that the mineralization was intimately associated with intrusive dikes, and those are all just spot-on characteristics of Carlin-type systems. So, there's no guarantee. These systems don't go forever, but if there's another one to the southeast, we think we have a good shot of having some of it on Miranda's Red Hill property.
Thanks, Ken.
Thank you.